You're listening to the Maven Approach Podcast, the show where we interview passive real estate investors from every walk of life who share their experiences in passive real estate investing while still working their full-time job. If you're someone who's wanting to start or grow your own cash-flowing portfolio while continuing to do what you love, you're in the right place. Here's your host, Chad Fowers.
All right. Well, thank you so much for coming on the show, Mike. Really excited to have you on today, and just want to give you a big warm welcome, and we'll get started. So thanks for coming on.
Thank you very much.
You're welcome. So Mike, as we've talked in the past, you and I had a conversation about a week ago, kind of talking about your strategy for investing, as well as kind of what you do on the side for your primary employment. So tell us a little bit about what it is that you do day to day for your job and kind of where that lies today.
Well, I help people. I've been in the direct mail business for 42 years. I've dropped basically 500 million pieces of direct mail in my career. And so it started off way back in the late 70s where people were, the thing they had to do was go out and purchase a list, and, they would drop, 25, 50, 100,000, 500,000 pieces of mail at a time. Well, that's all changed around now. And so what I do is work specifically with synchronizing both direct mail and digital marketing, utilizing artificial intelligence. I also do an awful lot of retention and referral coaching to help. One of the big things that people don't understand is that with any kind of marketing campaign, data is 40% of your success rate. That's the basis. That's the foundation, is to get the right data. And so I have a number of different data sources that we can turn to, and it's amazing what we know about people and who's in market. So that's the business I'm into right now. I work with a lot of realtors to help them in their referral and retention, but it's also just other small business people. On the side, what I do is I invest in real estate contracts, land contracts, and that is where we're going to be talking about today. So Chad, what would you like to know about that?
Are you looking to grow your net worth through a cash-flowing real estate portfolio, but lack the time or know-how to get started? Maven Capital Group is your solution. We're partnering today with passive investors to grow their wealth through multifamily real estate. If you're interested in learning more about us and our process, head on over to mavencapitalgroup.co/free training. That's mavencapitalgroup.co/free training.
Well, that's a good question. I do love hearing your background just because it's so relevant to the audience that we have on the podcast, because just like you mentioned, data is king today. Anyone that can have the freshest data and the most accurate data is going to win in the marketing game, right? And I think big corporations, social media giants have figured out how to streamline that data process to be able to connect with audiences. And I think real estate investors are still using maybe antiquated ways to connect with their clients, sellers, or other investors. So I think that's really fascinating. And I think that really, like you said, I've been flipping houses for the last 4 years, and we go direct to seller in our marketing. And it's so competitive that if you don't have the right data, you're going to either be a day late or a dollar short on being profitable in your business, if that makes sense. And I think that you guys have done a good job at figuring that out. It sounds like that's kind of your bread and butter, is figuring out how to connect the data and the marketing to be the most efficient. So that's really cool. I did want to share the experience that, like I said, we were talking last week, and you had said, "Hey, what's your birthday? What's your address? I'll send you something in the mail." And a couple of days later after our conversation, I received a package from your business with 2 homemade brownies in them and a little note and a card that was personalized to me. I think that I just want to touch on that really quick, just because that's such a cool art of marketing that I think gets missed. And I just think it's fascinating what you do. That's really cool. And we'll talk a little bit more about that later on, but I just wanted to emphasize that really is something that makes a big difference. Yeah.
Thank you.
So let's talk about, like you said, you invest passively in real estate. And when I first heard about what you do to passively invest in real estate, I was a little bit unaware that this was a thing. So you had mentioned that you invest in land contracts, if I understand correctly. Can you give us an idea of what it means to invest in a land contract? What is a land contract?
Well, land contract, if you think of yourself as being the bank and you're the mortgage company, when traditionally somebody will go purchase a piece of property, it could be a multifamily, it could be a single family, whatever it is, they would either have a line of credit that they could pull from the bank, or they get a mortgage on it, a 15, 20, 30-year mortgage, whatever it might be. Well, in this case, if you went to a seller and the seller says, I will take back the note on the contract, so you pay me on a monthly basis, that's what in the Midwest here we call a land contract. So it's set up, it has its advantages versus renting. I also do my contracts in my qualified accounts and in my IRA, which is a tremendous tool for somebody just starting out. And so that's the gist of the whole thing. There are some limitations and some regulations that you have to follow with the land contracts, but it's a nice source of income, monthly income that you have. You get that instead of getting a rent, you get a house payment, and you're not responsible for all the plumbing, getting plugged up or a roof leaking or something, because they are actually a homeowner and they have to do that themselves. So that what that does is it takes away all the maintenance that you would have to either outsource or do yourself.
That's fascinating. So tell me a little bit, because that sounds a lot like seller financing. Is that the same thing, or what's the differences between a land contract and seller financing?
There really is no difference except for some of the regulations.
Okay.
So for the individual, and it all depends, there's different throughout the country. There's different regulations in each state. There's some federal regulations that have popped up as of 2008. But basically it is seller financing. You have the ability to leverage a seller finance. So if you want to get a loan against the contract, you can leverage that money. So let's say you have a seller finance of $100,000 and you're financing it, you can actually go out and get a loan against that so that you have some cash available to do some other things.
So that would be that would turn into somewhat like a home equity line of credit type thing.
It could be. Yeah. It just depends except for that they don't take your home, or depending on what the bank wants to do, they might want to take your home as equity or as collateral, but they use the contract as collateral too.
Contract. Okay.
So, because what we do is with a seller financing or a land contract, it's usually you get a higher interest rate on this. It's usually in the 6 to 8% when you sell the property, because they usually have a lower credit score.
Okay.
I look at anything from 550 to 650 usually as a credit score is what I want to aim for. And those folks, usually that throws them out of getting a mortgage. So that's the reason why you have a lot of folks that are looking for seller financed homes.
Got it. Okay. So you said typically you can expect to see 6 to 8% is what you're averaging about right now on those contracts?
Well, there's a secondary market for contracts too.
Okay.
My servicer is Contract Exchange in Cedar Rapids. And so because of the regulations and stuff, I can only service up to 4 contracts without a mortgage banker license. So what I do with Contract Exchange is they go out and they originate the contracts, and then they sell it to investors like myself so let's say they have a contract for $100,000 that the house was sold on for $100,000. It was sold for $100,000. That's what the seller's bringing back. They'll go out and they'll negotiate a discount to that seller so they can cash out of the contract, and they don't have anything to do with it. So they actually buy the contract, and then they'll turn around and sell it to an investor like myself. And so usually when you have that kind of arrangement, right now you're probably looking at 9 to 11% return on the investment, because the regulations look at contracts differently there's a different set of regulations for people that are living in the house, that purchase a house and live there. And then there's a different set of regulations for investment properties, multi-family properties, and that type of thing. There's 2 different types of regulations.
Interesting. How long did you say you've been doing this?
About 25 years.
Wow. Okay. So quite a long time.
Yep. And and people that I've talked to say, well, that's such a high risk. Well, it hasn't been. It's been a nice, steady flow. I've had people, I don't know if people remember the dive of the stock market in 2000. People were before, the late 90s, people were getting, 20, 25% return on their investment. And I was there at that 10 to 12% before the regulations all hit in. And they thought I was an idiot. Well, the stock market took a dive and they lost 40, 50%. And I was sitting there getting my 10 to 12% every month, just continuing on. Then I looked like I was brilliant. So it just depends on where everything is. It's a good steady stream, of revenue for you.
So what are the risks? What's the downside potential risk on that?
The downside potential risk is that you get a property back, which I have gotten properties back, and it could be, and if you get the property back, it could be in shambles. And you have to, I just got done redoing a property that I got back. I finally decided, because of the way the market is and everything else, I finally decided to cash out of this piece of property, but I've gotten this property back twice. And so the second time I said, I'm just going to cash out of it. So I fixed it up and flipped it. And, I ended up ahead of the game because the market is so hot in mortgages. And see, that's a lot of times too. What I'll do is I'll purchase a contract. I'll take a look at their credit score, and I've got some friends in the mortgage business, and I suggest to them, and if they're paying 7 to 9% interest rates, I'll suggest that they go to one of these friends and see if they can get them refinanced. And so let's say I buy a contract for a $20,000 discount, and within the next 3 to 6 months, they're able to find a refinance, or they find a bank that'll finance them at 3 or 4%, whatever it might be.
Yeah.
I've just made a tremendous return on my investment.
That's fantastic.
Just because they have to pay off, if I have 100,000 and I bought it for 80, they still have to pay off the $100,000. So I make a $20,000 spread on that.
Wow. Is there any barrier to entry to doing this with the company? You had mentioned a servicing company. Do they have any requirements that you have to meet as far as liquid capital or anything like that before you can start doing something like this?
Well, what they do is they take every, contract by contract basis. It used to be, there was, way back in the day, I mean, you had some small contracts, for $30,000, $40,000, $50,000. And, now it's not quite as low as that. But you see a lot of, and this is great for rural communities, because there's a lot of rural communities that don't have mortgages available to those folks. And so there's a lot of buying and selling on seller financing there. So there's not really, I mean, you don't have to show your balance sheet or anything else. That's what contract exchange. You just talk to them and see what they have available. And they just put out, well, this contract's available, this contract's available. And they don't finance anything. So this contract's available for $60,000. If you have $60,000, you buy the contract.
You have to have that liquid.
You have to have that liquid cash.
Okay.
So you got to figure, you either got to have it through the bank or through some lending institution or just yourself. Gotcha. So it takes a little time to get it. And then if you do this within your IRA, and a lot of people don't understand how to invest in real estate through their IRA, it's available. I utilize Equity Trust. There's another one that my wife utilizes, which is Cedar Rapids Bank and Trust in Cedar Rapids, Iowa. But you can do this under a Roth IRA, and you will never have to pay taxes.
I love that. Yeah.
So you can do it under a traditional IRA, which is where I started, because the Roth IRA wasn't even existent when I did that. Right. So I've rolled some things over in the Roth IRA. But if I was a young person, a young investor, I would look at that Roth IRA, because everything you do in that IRA is tax-free.
Right.
Yeah, you can own rental property through that. You can have some financing through rental property. There's some rules and regulations you have to follow, but Equity Trust or Cedar Rapids Bank and Trust will walk you through that. And so the beauty of that is you don't have to, you don't get your depreciation that you would normally get through owning a multifamily outside your IRA, but then you don't have to recapture any of it either. So all your appreciation and everything else. I have a friend that he bought a piece of property on Maui 32 years ago. Okay, he's owned it for 32 years. He's rented it out. He bought the property for $165,000 32 years ago, which was fairly expensive at that time. And then he was able to subdivide out a couple of lots, which was he was able to get $50,000 for each lot. He had about $25,000 in cost to subdivide it out. So his basis was like $95,000, for the house. Well, it just appraised out at $750,000.
Wow.
It's just a 1,100 square foot ranch up country. There's no basement in it. It's just, but it's Maui is what it is. Right. So that's what it would be. So if he was to sell that, he was going to have to owe about $200,000 in taxes if he was going to sell that outright. What he ended up doing is he ended up borrowing against it, because he's getting about $3,000 a month for rent. That's where it's at. So he borrowed against it and then bought some life insurance. It was an interesting concept. But if he had done that within his Roth IRA and sold that property, tax-free.
Tax-free. You said that there's a company, Equity Trust Company. Is that right?
Yes, right.
And do you have to self-direct the IRA to be able to do this? And does Equity Trust help do that? Or
everything is self-directed. They're just there to make sure everything is done right. They have all the paper.
Sorry, if I work for an employer and I just have a Roth IRA set up, I can't necessarily do what you're saying without going through a third party equity trust company or
right. You need somebody, I can't remember what they call it, but you need somebody that can do that kind of thing. And not everybody that works with Roth IRAs do real estate transactions.
Okay. So it's very specific to a specific company that does that.
Right.
Interesting.
Right.
So how much time and effort do you have to put into these deals that you're doing with these land contracts? What would you say on average a month you have to allocate time wise?
2 hours.
2 hours. Wow.
All I got to do is get the payments and make sure, basically it's bookkeeping.
Okay.
Making sure that the payments come in and making sure everything is all posted correctly, that type of thing. With contract exchange, if people have not made their payments, they do all the follow-ups and everything from that standpoint. Any kind of, if we need to take back a piece of property, they handle that all for me. There's a charge for it, but they handle that all for me. So I'm as about as hands off as you can be.
That's fantastic.
From that standpoint. Now, and you can be hands on. This one I just redid, I was a little bit more involved because I worked with the contractor and some other things, but that's out of the, that's out of the norm, from that standpoint. So, it is, basically it's bookkeeping time.
Bookkeeping. Okay. So do you recommend this for someone that's younger? It sounds like we talked a little bit about it, but when's a good time to start looking at this as an option?
Well, the earlier the better. When you're purchasing a contract, you're probably purchasing it for, the length of the contract is 15 years. You don't know if the contract's going to sell early or if it's going to go out straight out through. Now, if you wanted to sell a contract, like right now, I'm 66, I'm still going to buy some contracts. I'm going to be looking for some shorter term, maybe some 10-year contracts. I haven't gone out to 15, 20 years, which I could do. If it's a good enough deal, I'll do that. So you got to be prepared to have that money sitting out there for a while, just like any other real estate deal. And the earlier the better, especially if you want to utilize your Roth IRA or anything else, because you need to fund that. Maybe the first 5 years, you really need to fund that as much as possible, so that's the starting ramp. If you're going to do it under the IRA, is that,
right.
If you do it outside the IRA, that's fine. The thing about the income coming in, it's real income. It's not, long-term gains or anything like that.
Okay.
That you're going to get. So you're paying at your tax rate. If you make some good, because what happens is the payments that come in are amortized out. So the majority of it, you're not taxed on your principal coming in, but you're taxed on your interest, and it's interest income, and that's taxed at your rate, your current rate.
Do those typically pay out monthly or quarterly, or how do you get
monthly?
paid?
Monthly.
Okay, and
it's
it just shows up in your bank account.
Yep,
Wow.
The payments are made to contract exchange, and contract exchange does all the rest. The ACH or however you want to set it up. You can actually have a check sent to you and send the check on to Equity Trust or Cedar Rapids Bank and Trust if you want to do that.
Interesting. So and that goes directly to your Roth IRA. So unless you're, I think it's 59 and a half or a certain age, you're not drawing off of that necessarily for living expenses or anything like that. It's more of, if it's in the IRA, it's more of a retirement play.
Right.
Down the road. Right.
Right.
Okay. Got it. Okay. Terrific.
You can pull from that if you want to. For other things, if you have a kid going to school or something like that, you can pull from it. Mm-hmm. The Roth is the traditional IRA is more locked down than the Roth IRA because you've already paid taxes on that money going in.
Right.
So, that's the way it just takes. It's a long-term plan with a Roth IRA, but it's a very lucrative plan.
Yeah. How would you say it's changed your financial trajectory going forward, being able to invest in these?
Oh, I was, it made retirement. I work half time because I love what I do. I'm not full bore. I don't have anything to worry about. It's been a good life, to do it this way. It has reduced the stress of the ups and downs of markets and things of that nature. And anything that you can do where you don't have to pay taxes, is really, it's amazing. It's amazing how that blossoms when you don't have to pay taxes on it compared to dealing with that all the time. Anybody that's owning multifamilies outside of a qualified account, it's, they've got a lot of things that they have to worry about. And so I like it. I liked it very much just simply because of the maintenance thing. I had probably 30 rental properties, and I basically sold all those to get into this. And because a friend of mine got me into it, and he says, because I was complaining about all the maintenance and the calls in the middle of the night. And I mean, there's other options right now that wasn't back when I was starting in the 80s. There's a number of management companies that will take single family properties and manage them for you. Before, it had to be a multifamily property before they would manage it. So there's like Renter's Warehouse and some of these other places that'll do that.
Interesting. I listen to Robert Kiyosaki quite a bit. I don't know if you do.
Yeah, I do.
I'm sure a lot of people have listened to him, but he always brings up the question, what's your largest expense? And a lot of people think it's your mortgage, but he always realigns your expectations, and really it's taxes.
Right.
If you want to earn a good income, and if you want to own real estate and real assets, taxes are a big issue that you have to consider. A lot of people just think, I'm going to earn 100,000, 200,000. But if you're in the wrong tax bracket, or if you don't structure it correctly, you could end up paying close to half of that towards taxes. So that education and that ability to be able to invest directly into the IRA probably is a real game changer for you at the stage of life that you're in, like you said, just because that helps to really eliminate a lot of that tax liability that you'd be kind of held accountable for at the stage.
I think it's Kiyosaki says you don't own your money, you need to control it.
Yep. Yeah.
And that's what Buffett and that's what Bezos and everybody does, is they control their money instead of owning it. And that's a concept that people have to really understand. And that's one of the things you can do with real estate investing. And a lot of people don't understand that they can fund their IRA or whatever it is with real estate.
Yeah.
They'll also do gold, they'll also do Bitcoin and all that other stuff, but I'm too old for that kind of risk. I'm more risk adverse at my age. I'm 66. So that kind of thing.
So what is your 5-year plan look like going forward?
Well, it's, the investment plan, like I said, if I've got 3 contracts that have refinanced and cashed out. So I've got some funds that I got to invest in. And so I'm trying to find, like I said, contracts no longer than 10 years. I'm 66, that'll put me at 76. Because if you have to sell a contract because of a death or something like that, you're going to end up taking a discount on it.
Yeah.
So you want to hold it for the length of the, unless they decide to move from the house and they sell the house or they refinance it or something along that line. So that's, from that standpoint, that's where I would continue on. I'm dabbling a little bit in the stock market and some of the things I do have 5% of my investment portfolio in Bitcoin, just to see where that's going to go. But my bulk is still in the real estate end of things. And, then at 70 and a half, I have to start drawing down on that. I'm drawing down a little bit on it, but it's going to go up quite a bit at 70 and a half for what I have to draw down. So, the beauty of the whole thing is that I've got options, and that's all I ever wanted was options.
Yeah.
I travel a lot. There's some things in my life that, made some changes. Unfortunately, my wife was diagnosed with dementia, and so that changes stuff a little bit. And so you just keep going and moving forward. But that's where I'm at. But what if I was mentoring somebody young, I would say to them, figure out how you can control real estate in a Roth IRA. That would be my one piece of advice.
Fantastic. I love the idea of having options. Everyone always asks, hey, why do you want so much money? Why do you want to be wealthy? Why does it matter? And that's my answer. Everyone has their own answer, but that's also exactly how I look at it, is it's options, right? You never know what life's going to bring you. You never know when things are going to change. Life happens, right? And to have that option to be able to shift gears or be able to do something different or take time off or whatever it is, those options are what really matter. Because then again, like you said, you're living life according to what your terms, right? You're living on your terms instead of having to just react to the situations that come up.
Yeah.
So I think that's great. As far as kind of your full-time employment, kind of what the business that you're running, what's the best way for people to learn more about you, to get a hold of you, to be able to connect with you that way, to learn more about that?
You can email me. It's M Larkin, LARKIN, at AmericanBus.com. And if you're interested in the Mailbox Power program, you were talking about your brownies and everything else. We have over 300 campaigns in there, and we have figured out a way to automate individual programs, such as, if you're a realtor or any business person, you want to really impress somebody or build a relationship. We've got a birthday campaign where 7 days before a person's birthday, a greeting card and order is queued up and printed and dropped in the mail, so it reaches that person on or before their birthday. And when you think about it, when was the last time you got a birthday card from somebody else besides your brother, sister, or your mother? And that's it, and anymore. And so it helps people stand out. We also have some great direct mail postcards for real estate investors that have been proven to work. That's old school for investor. Anybody that's looking to flip houses, that is the one of the best ways, besides duking it out on trying to get to number one on the Google page. That's a big thing. But I've got more and more investors that are just dropping 250, 500 postcards in a particular area, looking for people that are a little bit older, 65 or older. What I find, I've got friends that are flipping houses, and they're finding that probably their biggest, the end market person is the millennial or baby boomer that their parents have just passed away and they've got a house they got to sell. And a lot of times they don't want to mess around with listing it and everything else. And so they're looking for an investor to come in and purchase a house, to cash out right away.
Yeah.
You mentioned that, and it's key that you get a lead, you're following up on that, because they probably may be talking to three. They'll go online, they'll pull some people out. So the cards have done very well. I've got a friend that has a Homevestor franchise, and he says the direct mail pulls more deals for him than anything he does online.
Interesting.
They do have a great presence on the internet, but it's direct mail first, and then it's SEO search. And he's been doing this for 45 years. He's a multimillionaire. He was one of the first ones here in Des Moines. He goes back. He was one of the first ones to put cash for your house, any location, any condition, in the classified ads in the Des Moines Register. And that's what built his empire.
Yeah.
Now that can't happen. But anyway,
Right.
that's the way he started.
Well, I think that's the question that everyone's asking right now, especially, I mean, in any industry, it's so saturated. It's how do you recreate that, hey, I was the first to the market experience where you can grow your wealth. And I think what you guys are doing with Mailbox Power, that's correct, right? It's Mailbox Power.
Right.
Yeah. So Mailbox Power, I think that what you're doing is bringing back the art of relationship building and customer retention versus just the science of it, if you could say that. Like, yeah, we need to follow up. We know the steps that we need to take to be able to follow up, but the art of it is missing in a lot of people's businesses. And I think that goes beyond just real estate. If you're a chiropractor, if you're a physician, if you're a dentist, and you're in a saturated market where you're trying to build your customer base, I think we're all still trying to just beat the same thing every time, right? Like there's so many things that we can do. We can send a postcard, but if we can get that art of the relationship, like I said, I received 2 homemade brownies after I had talked to you. Like that, that doesn't happen. That doesn't happen. You usually get a piece of mail, a postcard or something in the mail, which is great. But if you can add those personal touches for any industry that you're in, you're going to be top of mind. And the best thing about it that I saw after you showed me Mailbox Power is that it's so simple, right? It's just, you go online, you see what you want to send. They have many different options that you can pick from. And then you literally just input their address, their name, and the little note that you want, and then it goes to them, and it's quick, right? It's quick.
Well, we're always looking to make that so much simpler and easier. For instance, you can send out a link. One of the things, let's look at real estate investors, and because realtors use this all the time. People forget once you've closed a deal or whatever it is, your best customer is your current customer and your repeat, to get referrals and that kind of thing. And even if it's just staying in touch with somebody, once a year with their birthday or maybe an anniversary, or just doing some cards once every 6 months just to stay in touch. And oh, by the way, we can help anybody else out that you might want to, that you might need. It is staying in touch with those people. That's your vein of gold for a lot of folks, is your current customers, your current happy customers. And it's the old out of sight, out of mind. If people aren't reminded that, hey, I remember Chad, he did this, this, and this. Yeah, I'll refer my brother or sister or whatever to him. And so that is the power of the referral program. And if you add that to, like, I've got a lot of mortgage bankers right now that are starting to follow up with I got one mortgage banker I'm talking to right now that has over 600 loans that they've closed over the years. And we went in and I had those 600, they gave me the list of 600 loans, and I ran it through the national change of address, and her jaw dropped because there was over 100 of those loans that people had changed address. So that tells her that those people went someplace else to get their new mortgage.
Yeah.
And she was sick, and so that's where this all comes about, because I've taken a number of lists and I've run them through the national change address, and people are just shocked.
Yep.
Why didn't they come back to me? Well, you haven't reached out to them.
That's so true.
And those little brownies, those 2 brownies and a card cost you $11 roughly to send it out. That's postage, card, brownies. That's inexpensive to reach out to somebody, and it does make a big impression.
It does. If you're doing that once or twice a year for birthdays and maybe holiday, that makes a huge difference. And that's, like I said, that's how the millionaires are made these days. It's not being first to the market, because again, there's so much availability with the internet and social media and everything like that. It's pretty hard to make it first to the market. It's the real game now is who can build the best relationships, the strongest relationships that bring in that recurring revenue through repeat business and referrals. That's the name of the game. So I think that your product really helps streamline that process to be able to do that. And as mentioned, it's not just in the real estate industry. It's any industry. You can go on that website, pick something that you want to send to somebody, customize it, personalize it, and it's as easy as that. So that's a fantastic product. And I think it segues really well with real estate and kind of what you're doing with your investing as well.
Yeah, but if you want to get onto my team, it's an affiliate type of program, but it's mailboxpower.com/referral coach. Because I also coach people into when you do that kind of thing, you want to set up a web page where you can put a QR code on there, and somebody wants to refer you to somebody, they can scan that QR code and they go to the referral page, and boom, they just fill it out for you, and you go from there. I mean, that you just want to make it as easy as possible for anybody, and then you want to have something nice to send somebody if a referral pans out. You want to be able to reward those people. And it's not only just money or what have you. We also have gift cards to Starbucks and Home Depot and all the other, a number of other ones. But you want to send somebody something special, for referring people. It's all about building that relationship.
Agreed. So we'll put those links in the show notes on the episode. But definitely feel free to check out Mike's website that he mentioned. Like I said, that'll be linked in the show notes. He also provided his email. If there's anything that you have questions on as far as investing in notes specifically, or the product that he offers through Mailbox Power, he's a great resource. Like I said, I talked to him last week for about an hour and was able to really kind of open my mind to the possibilities of that relationship building side of things. So Mike, really want to thank you for your time. For being on the show, for sharing your knowledge about real estate and notes and what you've got going on. And just want to say thank you and hope you have a great rest of your day. And we'll talk to you next time.
Yeah, thanks. And I'll go ahead and I'll give you the links to Equity Trust and Contract Exchange too, for anybody that's interested in that.
Perfect. Sounds good. Thanks so much, Mike. Appreciate it.
Thanks. Yep.
Well, there you have it. Thanks for joining me on another episode of the Maven Approach podcast. If you've benefited from something you've heard on this episode or any of our other episodes, please head on over to iTunes to leave a rating and review for the show. This helps us reach more people like yourself to elevate everyone around us. To learn more about Maven Capital Group and how you can be a part of our online community, follow us over on Instagram to stay up to date on all of our latest opportunities.